Hello, everyone. Happy Sunday. Hope everyone's having a good Sunday so far. Good evening, Charles. Good afternoon, Patrick. Bet you it's nice and cold up where you are. It's getting cold down here. We've had tons of snow. Greetings from wet and cold SoCal. I bet you it's not as cold as here. Bet you it's not as cold as here, but it is cool there. Definitely cool. Hello, we're going to be back below zero at points tomorrow. Back below zero. You triggered the idea, could history repeat? January 2001 double top in the last week of January. We fell 44%. Yep, it could. That's the biggest. I hate when people, and I'm not picking any options, so I do. I hate when people try to find a roadmap the way it's exactly going to unfold. This is the same as this is the same as this. But I do agree, from even just a pure price action, and I brought it up, but so many people put out this, it's like they try to map it exactly to a certain year in stocks. What's reminding me is that because I was around, I was kicking, I was trading off during 2000, 2001, 2002, and this reminds me distinctly of the price action in January of 2001. That does not mean if we roll over we have to fall, so like what you put up the numbers 44%, does not mean that at all. But just the rah-rah mode that we have a lot of junk leading this rally. And this is one of the biggest reversals to grow. Like, value stocks have been flat to hammered. And companies producing good earnings, like we were talking about on Friday, getting hammered. And junk and stuff like missing earnings and stuff that has no earnings, it has been going through the roof. And it's like major growth stocks are going through the roof, but we're not in a growth cycle right now. So, could we be setting up for something like that? Yes. We do not have a topping pattern, although we have daily cycles at the top and weekly cycles topping. So I am watching for a potential rollover move. Now, we'll get to charts in a second. Potential rollover, remember, there's two kinds of corrections. We can move sideways, we can drop. Even on a pullback correction, there is still tons of support. So, unless we get a significant topping pattern, or we get major selling momentum taking us through key levels, that it might not be for a new potential major drop just yet. Now, we do have Fed. We do have Fed Wednesday. With everything I've been looking at this weekend and the looser financial conditions and everything else, I don't think they will, but I think they should go 50 to try to smack this market around a little bit and say, okay, people, wake up. But will they do that? I doubt it. Now, so if they don't do that, I think the press conference has to be, and the press conference is the most important thing on Wednesday, 30 minutes after the rate hike decision, that Powell has to pull another Jackson Hole kind of thing, and tell the markets, you guys are getting ahead of yourself. You're pricing, so we're going to keep hiking. We're going to get over 5, and then we're going to keep evaluating. And on our hiking, we could even go more, but we're then at least pausing in this extended period of pause, and we're going to be in valuation mode because I'm expecting inflation. The January inflation numbers that are released in February. And what date is that? Does anybody have that in front of them? When the next, the ones that the major, I know they follow the PCEs and everything, but the CPI, that headline number, all right, that's the 14th. Oh, Valentine's Day. Happy bloody Valentine's. I expect the CPI will pop back up based off a lot of commodities and where they've been going. So that could really put a wrinkle in stuff too. That could put a wrinkle in stuff. All right. All right. Hello, Christoph. Hello, Coco. Golden crosses don't matter. Said that before. They don't test out. Tomorrow, very light day. Dallas Fed Manufacturing Index and then the 3 and 6 month bill auctions. So just to see if how this relates in contraction mode for manufacturing from the Dallas Fed. But very light day. We do have some earnings tomorrow. Tuesday, we got the house price stuff. Chicago PMI minor, although still forecast down around in these mid to low 40s. So that'll be interesting, but probably not terribly market moving. Consumer board consumer confidence. We had the other consumer sentiment numbers out on Friday, which the market really liked, especially the inflation outlook from a consumer point of view, which I've never understood because, you know, it's just all based off of a lot of stuff with just some key volatility like of energy costs. But that is another number, but it's minor because you got the Fed Wednesday. Dallas Fed Services Index. You have to see how bad that's in contraction on Tuesday, but everything's going to be moving up to Wednesday. Wednesday morning, we have the ISM Manufacturing PMI. After the open, we have the S&P Global Manufacturing PMI, which is more mid-sized to small. ISM is larger businesses. So we have those 15 and 30 minutes after the open. But everything's going to be rotating off the 1 p.m. Central interest rate decision, and then especially the press conference that starts 30 minutes later. So that's what everything's going to be keying off of. Thursday, we got initial and continuing jobless claims. And that's about it. Jobless claims, remember, from the last number, holding up exceptionally well still. I'm talking initial jobless claims. Friday, we have, first Friday of the month, we have the unemployment figure. So we have non-farm payrolls. So this is going to be a very interesting week. And then we have the services, composite S&P PMIs, and the ISM non-manufacturing numbers. So we got a very busy week, especially Wednesday and beyond in terms of key numbers. Market map. You got some mega cap rallies on, especially Tesla on Thursday. What was it? What was the amount of option turnover on Tesla alone? I forgot what the number was on Friday. Was absolutely insane. Insane. Healthcare. Pulled back there. Energy pulled back there. What really held the market is Visa, nice rally off of their earnings, but it was really the mega caps holding up the market last week. For last week, we had consumer cyclical, technology, and real estate and comm services leading, and there's a lot of junk still in these indices that rallied. That's what I'm talking about. Energy pulling back on Friday. Fed watch is still there. It's expecting the 25 basis points. The 50 is not even on the radar screen. That's why I'd love to see it and really smack this market around a little for loosening liquidity, but won't happen. Greed, 69. Remember, the tipping point to extreme greed is up here, and I start especially watching for topping signs with the cycles being at the top. Again, doesn't mean it has to roll over. That means we're watching for it. Keeps climbing up towards the overvalued. And remember, this is not the major overvalued, but fairly valued goes from -1 to 1. And we're closing in on that 1, which does get into overvalued territory. Yield curve model strongly overvalued. That's market valuation is going to get into overvalued also. It's right at 1 standard deviation. P to E, overvalued. So interest rate, fairly valued. So you know what? Just something I keep an eye on to keep my head sane. No, neither the golden cross nor the death cross matter. Because it doesn't matter. The golden cross or death cross do not test out well, especially for timing. Hey, Nuz Industry, and I've said that before. I don't care if it's the golden cross or the death cross. They both don't test out well. And why do you always think I'm so bearish, Coco? Said when put out buy off the percent B and what I was watching for, and then it's in trailing mode. Still, we're not really, the longer term trails aren't done from a bullish perspective yet. I don't know why you think I'm so bearish. Tomorrow, oh good, we got SoFi junk. That's really what most people are watching for. After the close, it's really light day. But then Tuesday, we got ExxonMobil that hit new highs. UPS, that's going to get interesting from their guidance, I think. What else do we have? By the way, I put up, I don't know, and I took it off of unlisted mode. I put it back into viewable by everyone on Jim Aria's Futures Ed podcast with Bob and Jim. Were on it on Friday with Dr. Robert Malone. It's already got taken down once. Okay, so if you want to watch that episode, I'd probably jump over and try to do it. I also put a link in the Discord, but I try to do it sooner rather than later, because I don't know how long it'll be up. And hopefully it won't ding the channel. It probably will, though. So if you're on Discord, I might make it unlisted again if it gets taken down, where it's on a couple different YouTube sites. If it gets taken down again, it might go unlisted to try to protect this channel so it doesn't get banned or screwed or demonetized for an extended period of time. Tomorrow, we also got Tuesday, Caterpillar, McDonald's, Phillips 66, Marathon. So there's a fair amount of oil-related stuff on Tuesday. After the close, we got AMD is a biggie. AMD after the close. Wednesday, this should blow it out of the water, Peloton. That was sarcasm. Wednesday morning, T-Mobile, Peloton. After the close, you got Meta. That's your big one. And then really kicking it into gear is Thursday. So Wednesday, we also have rate hikes. But Thursday, ConocoPhillips in the morning. You can always pay attention to Bristol Myers Squibb. But after, you got Amazon, Apple, and Alphabet, and Qualcomm. So this, don't get caught asleep on Thursday afternoon. And then Friday quiets down. But Thursday is like the biggest earnings day of the whole earnings season from my perspective. And you got Starbucks in there. So that's where we sit. Short term, I've been in bullish mode. I've said it's not to buy tomorrow because it's been in trailing mode. And there's been the last buy signal, which I did talk about, was on Friday the 20th. With break above Thursday's high, and then if it closes above there, it's a percent B buy. That was the last minor one. The last major one was back on Friday the 6th of January. Those were my two buy signals, and I talked about it. Even in the NASDAQ I've been talking about once we broke out. We had the double bottom in the NASDAQ, and how long have I talked about I expect the NASDAQ to test that 200? And it did. So now it's in trailing mode because there's no major topping pattern yet. Remember, we had that little double top on Tuesday, minor topping pattern, little pullback. We don't even have a topping pattern yet. So, this looks like a short-term pause. Could very well be. I mean, the key level to start really getting breakdown is around 3,900. Early warning sign is around at least 4,015, getting below these peaks on a closing basis, but that just takes us back to the rotation zone. Right below that's the 200. Right below that's the 50, which we caught on last time. So even, that's what I'm saying, even 3,900 is the first key warning sign. Is that a pretty big drop? Yeah. But could we easily pull back to even 4,000, 4,025 and just do some kind of sideways correction, especially on a closing basis? Yeah, we could do that too. We get below 3,900. I'm perking up for okay, especially if you've done it on momentum with some mega caps rolling over. Daily cycles at the top. Weekly. Getting to that topping area. Shorter term, for overnight, we don't have much. We got a little pullback, after the right at the end. This was profit taking on Friday, pretty much. Other than that, what I'm watching right now is this 4-hour rotation zone for any pullback for overnight if we do. If we rally up, it'll be yesterday's highs from Friday. But the first key pullback area is 4,068. Next is 4,052. And we don't even have another, this is not a strong enough pausing bar that I want to do projections. But the next cluster, if we do try to push higher tomorrow and Tuesday, 41.21 to 41.31 is my next minor area. If we get a pausing bar, then I can do the harmonic projections. I'd rather just not have that Friday end of day key level. The NASDAQ, again, cycles at the top on the daily, back to overbought mode. But the NASDAQ, in order to do some real technical damage, has to get below about 11,600 again. Minor is about 11,961. And then it has to be 11,006. To the upside, since we don't have a great pausing bar yet, I can do reverse harmonics here. Or you can do forward harmonics from the last swing down here. I'm doing reverse harmonics from right here, from the last little minor levels. Because now I have 12,519 to 12,563. 12,519 is key. Why? Because if we close above there, we should continue a potential run, and I would not be going overly insane, but 12,926 would be the next key level area. So right now, until I get some other stronger pausing areas, my next key target is 12,519. You're going to try to short Peloton where it is? Oh. Okay, Rich. I don't like charting stuff that close to, even if Peloton's going file for reorg, I still hate, it's why I wouldn't be shorting even Best Buy, which should default, by the way, Bed Bath & Beyond should default on some of its bond payments on February 1st. So we're going to keep an eye on that. But would I be shorted? No. Not down here. It's not worth reward to risk, should something change. Dow, still caught in the range. Sort of like caught in the Bruce Hornsby in the range. 34,307. The next key target is 34,490 area. Support is the major support, 33,765. Where I'll get interested in the Dow is if we break below 32,920 for more rolling over. Until that happens, just caught in a range. Russell, let's see here. let's see here. We still have potentially have the double in play. The cup and handle was officially triggered on Friday. The key level for the Russells is 1833 area. Can't get bearish until we get below there. Cycles at the top, everything. Cycles at the top and the top. That's why I'm in cautious mode. Next key level, next minor key level is about 1936. The next major level is 1950. Your minor pullback area is about 1900. DAX still have a little potential daily double top. Needs a close back below 14,961. This is finding some major resistance up here. Notes, we have the little mini double bottom. Would need a close above 115.13. And you might be wondering, well, what are the second targets into the wicks? Yeah, but it's completely valid on the 4 hour. And it's so this could be triggered on a 4 hour. And from an aggressive standpoint, a 1 hour. By the way, I have to update those targets. And the second target is still within the wick. So it's, I mean, within the candle body. So it is still good. And those would be the first two targets I would be utilizing. 115.28, 116.04. That's about it for the notes. But cycles are at the bottom. Trying to put in the bottom, still no close below the rotation zone. However, if we do break below Friday's lows, I will watch for a quick trip back down to 113.30, 113.31. Dollar index, I'm watching for a potential bottoming set, major bottoming setup this week. But nothing yet. There's still a selling pressure below between about 101.80 to 101.95. It's got to get through there before I'll get interested. If we do break below 101.11, 101.10, we will probably make a quick trip back to 100, and I'd still be watching for a bottoming pattern. But it's definitely tradable on a short-term breakdown basis if we do get below that 101.11. Crude, not much pullback on Friday. Cycles getting back to a low basis on the daily. Still stuck at the high basis on the weekly. And the double bottom pattern that's been confirmed and triggered is still in play. What was interesting is it's sitting against that weekly rotation zone, so it really, that's why it's still, if we really break down below 78.60, it might be lighten up and then try to get back in the pattern a little lower, but so far it's a sideways correction. Natty gas, not much to talk about there. Still trying to put in some kind of bottom, but nothing yet. Gold, still in trailing mode to the long side. Nothing to talk about there. There's no new entry signals. We got signals finally rolling over a bit on the daily, but still at the high on the weekly. Silvers just moved sideways for an extended period move. I will get interested in, all right, we have a short-term top in silver if we get back below the 50. Otherwise, it's still a sideways correction. Copper still, we had a little pullback in some commodities, but nothing substantial yet. Copper, I can't get in bullish mode unless we get above 432. Now, a close above Friday's high is a %B buy with cycles at the bottom, so that could be a little front run pattern and then play it above 432 for a longer play. Going to be playing on the opening this evening with the Asian session. I'm going to be very focused on the 10-year Japanese bonds, especially if they pop back above 50. Why? If we start getting intervention, going to watch for the rollover play in the yen below 129. Euro, there's not a great pattern yet. There's just major overhead resistance at 109.42. Nothing's changed with that. Pound, nothing's changed with this. And yes, the double top, potential double top, because it's not confirmed yet, is still in play. Bitcoin, really strong up move on Friday. Still the next targets. Still watching for another rollover play in this 24.5 to about 24.9. Tesla, next key target 188.69. Can't get bearish on this until it does much more of a substantial pullback, but it is incredibly overbought with cycles at the top. But there's no shorting pattern yet. The only thing are a couple gap fills to the downside. Nvidia, the next major target based off this weekly inverse head and shoulders is 231.57. Don't even have a pausing thing here yet. Where I'd be cautious, why does that keep going off? There we go. Where I would start being cautious if we trade below Friday's lows, because you have a major gap fill. But could this easily run higher into earnings on the 22nd? Yes. Or sorry, where was I talking about? Earnings on, the 22nd? Yes. This could easily still run higher, so the next target is 231. And if these markets even move sideways, that's key. The major gap, you do have if we break below 194.05, I'd be very careful on this in the short term. Don't know why that candle is not showing correctly. Oh, go. The dollar index is not dead. It's gone into consolidation. How can you say DXY is dead? That's a dollar index. How's the dollar dead? It's gone into consolidation ahead of Fed announcement. Dead and consolidation are very different things. Nvidia could go to 260. Well, what's the next target? 252.14, then 272.71 are the targets the upside. There are some bullish articles coming out. I mean, this thing's going to keep going until it stops. I just know that long term, I don't want to be paying. You know, it keeps going. We could have a PE over 100 again. There's all these bullish articles with, it's going to fuel chat AI. The demand for NVIDIA is going to go through the roof. They've already given guidance, downward guidance a couple times, even if they come in line. Short term, you just got to go with the momentum play. Long term, it's nothing to get married to in a portfolio. So that you got to differentiate. As I went over some of these things, you got to differentiate a short-term play versus a long-term hold. Short-term play versus long-term hold. Do not ignore about 213, by the way, for a stop raise. So, what else? I'm going to keep this a shorter session today. We'll look at the spiders and the Qs tomorrow morning. Apple, I'm just watching on any continued rally going into earnings. That 200 area is pretty substantial resistance. So it's gone on quite a tear. But I'm watching. There's just price action resistance up here. And we got earnings on Thursday. So between about 148.50 to 150 area is pretty key resistance going into earnings. Keep that in mind. We got Meta, which finally reconnected with the 200. We got a little potential divergence, daily signals at the top, weekly pin to the top. If it does continue to rally, the next key target is about 169. Google, you still have the potential double bottom. It finally reconnected with that 87.5 twice, making a little minor double top. So if we don't invalidate that before earnings, I will be keeping a key eye on that double top and the double bottom, which has not been triggered or confirmed yet. So that's where we sit right now. What else? Is there anything else I have to cover? Is there anything else? We got Alphabet. Oh, Amazon. Amazon. If, again, we keep the market strong and Amazon, pay attention to this. If Amazon can get above about 104, you have a gap to 110.96 right in front of the 200. So pay close attention if Amazon breaks out above 104. Because you got that magnet going into earnings. Not saying it will, but I really need, if it was going to break intraday, I need it to sustain above that 104 area. Technically, you could go closer to 104.50 on a closing basis. All right. That's where we stand for now. I will chat with everyone tomorrow morning and hope everyone has a fantastic rest of the weekend. Remember, jump off here, go watch the Futures Edge podcast with Dr. Malone, and I will talk to everyone later. Bye for now.